Hello, everybody. I'm Peter Grant with Zaner Metals in Denver, and this is This Week in Metals. My colleague, as usual, Mr. Peter Thomas. How are you, sir?
I'm good. I hope everyone had a great weekend. I hope that you made a little bit of money over the week. It's certainly been available there. To say the swings have been wide is an understatement, Pete.
to, to say the least.
Yeah.
Yes, our
But they were forewarned a couple of weeks ago. We called it almost to the day that when we thought it was going to break, and boy, it did.
yeah. I mean, there certainly was. The market was pretty overextended for sure, and
Yep.
I don't. When it went, I mean, it went. It was sort of cascading sell-off, and
Of course.
I think there were a lot of week longs, in at higher levels that just said, "Oh, let's bail and we'll live to fight another day."
Well, I mean, when you pay $29 for silver and it breaks $5, you got to ask yourself, what am I doing here, right?
Yeah, yeah, that's
Yes. So
pretty accurate. Well,
that's
so
pretty
so
scary
last
stuff.
week, gold ended up down 4.5%, which doesn't sound
Right.
all that
Which is
bad,
which is the
but
first time since June that we've closed lower, right?
right, it was the first lower weekly close in 10 weeks.
Yeah.
So
Yeah.
yeah, and while 4.5% may not sound all that, some of the losses that we saw on Tuesday were recouped by the end of the week. I mean, from the high 2 weeks ago to the low set last week, it was 174 bucks. That's a pretty big
It's a big
move.
piece of change. Special shout out to our friend Myra Safong at Market Watch. She did a weekly report and crunched the numbers down and really did a good representation of that. A lot of people call us and ask us where we get a lot of good numbers from. That's a great source.
Right.
And
Yeah.
and she covered just what you said very, very well this week.
Yeah. So you know, corrective is the top in, Pete. What do you think here?
Well, I think, it's Zaner Metals Week in Review, and you can come to Zaner Precious Metals and buy metal from us online at any time. And we're here to help you and guide you and try to review what's happened. And I think the first thing we always do every week, Pete, is to welcome new people. So we're going to welcome Berkshire Hathaway to the club. They've stepped in for the first time and bought a $500 million worth of gold. And our friend Mr. Ross sent along an article to us that I'm going to cover in a little bit. It's real exciting out there, and to see Berkshire Hathaway come in and buy gold for the first time in their history was really phenomenal.
Yeah, the Oracle is a well-documented poo-pooer of gold.
I think that's there was definitely something that stuck to his shoe when he left the movie theater. Now it's a $500 million and climbing.
Right.
Yeah, he definitely stepped in, and he stepped in big. So welcome aboard. We're glad to have you. If you want to give us a call, we're here for you.
Mr. Buffett, even though
Oh,
you're a little late to the party,
a little late, but you know
welcome.
what? He never comes light. That's for sure.
That is a fact. Well, let's continue with a quick review of last week. So silver ended up down a 6.5%. Um,
Right.
and again, it was the first lower weekly close in 10 weeks. Again, as you mentioned, from the 29.84 high 2 weeks ago to the
Right.
24.37 low last week, it's almost $5.50, and that'll get the heart palpitating, won't it?
It will, and we had some real interesting news towards the end of the week, Pete, from the Arena Group. They were quoted as saying that solar cells, which we have talked about numerous times on this show, and consumption of silver to absorb solar radiation to convert to electricity is almost all silver. Their expectations were usage of 82 million ounces this year, They're talking about next year and going out possibly as far as 25. They're not sure. They think it might be shorter than that. They're looking for an expansion of 120 million ounces for solar usage alone, which puts us up about 13 to 14% for consumption of mined product, which will justify us being at this level.
Yeah, well, great. Yeah,
Yeah,
I still think the fundamentals look pretty favorable, and
right,
this is true for gold as well. The
right.
it was overdue for a correction.
Yeah.
Perhaps it was a bigger correction than I anticipated.
Well, I called for a bigger one, so we were
Yeah.
on each side of it. Unfortunately, I called for $500. We got about three. I called for $5 in silver. I managed to get lucky and got that right, and on this show. So the question now is, how firm do we stay, and will the fundamentals, which are the negatives, of course, are the coronavirus. It looks like we're close to an inoculation that might work. Still a big if, but that will put a lot of pressure on gold. That will loosen things up. Also, the 30-year curve. I don't know if you've noticed it or not, but it's kind of coming up a little bit. We're
Yeah,
seeing interest
yeah,
rates come
yields
up,
creeped up a little bit,
creeping up. Yeah,
I mean, real yields are still in negative territory, and generally
they are.
that's a
Well put. Yeah, yeah. Gold
favorable for
carry is
gold.
still negative. Let's put it
Yeah.
that way. Yeah.
So, and so, I think that, even if we get a virus, or maybe I should say when we get inoculation for this COVID virus, that,
Right.
I think that there are still plenty of fundamentals that are going to remain generally favorable. It's not like the economy is going to snap right back. And so accommodations are going to remain, and that too is going to be favorable for the metals. I think for some time to come. It's not just vaccine and then everything's back to normal again.
Right.
Although
Right.
we
No,
would
no.
certainly welcome
I'm
a
with you
vaccine.
100% on that. Right, we have talked the fundamentals to death on this show for years and years and years to people, and here's let me put this under the microscope. Turkey. Our friend Ross Norman from England sent us a zero hedge article. That's your source, and it said that there is a bank run going on now in Turkey. And I had heard nothing about it. I was really glad he's put it out there. And the thing is that the Turkish lira in the last 3 years, now this is very, very interesting. Pay attention to this, people, has lost 50% of its value. So if you went to buy a loaf of bread today, it cost you $5, you're at 750, same thing, right? So there's a run to sell used cars and homes to buy gold, because gold's the only thing that has stabilized, held value, and or increased in Turkey in 3 years. So the underlying basis for owning gold is just that. It's stability in bad times and crisis. We'll continue to repeat that. A lot of people go, oh, it's just this great investment and yada, yada, yada. And boy, I got to hold a lot of gold. Don't go crazy. Don't sell your house. Don't sell your car, but put 5 to 10% into gold for the inevitability of inflation, which will happen eventually. What are we up to on numbers,
Let's
Pete, as far as
yeah, let's
injecting cash goes?
Yeah, let's touch on the inflation data that came out last
Right.
week.
Yeah.
All of it was hotter than expected. So
Yeah.
PPI came in at 0.6% in July. Expectations were 0.3.
That surprised a
CPI
lot of people.
similar, plus
Yeah.
0.6. Export and import prices. Export prices were up 0.8% in July, on
Right.
expectations of plus 0.4, and import prices were up 0.7%. So,
Right.
so everything across the board came in hotter than expected last week on the inflation front, um, and
Right.
and yet gold sold off. But I think that because of the liquidity that is in the market right now, that
Uh-huh.
again, I think that while we might see a period of corrective consolidative action in the metals here in the short term, again, this is another fundamental that I think is generally supportive to the metals.
And so bottom line is that we're seeing larger than expected consumption of silver. We're seeing good demand in silver right now. We're actually seeing we're actually at the end of a 7-year cycle of overproduction of silver, and it appears that we could be entering a 5-year cycle of underproduction. I don't That doesn't change in my mind. As far as gold goes, we're still seeing very, very good demand. All the numbers are pointing that way. The positives are outweighing the negatives, and it looks to me like that is pretty much where we're at.
Right. Let's move on to the PGMs real quick.
Absolutely,
Platinum was down 1.6% last week. Made another
that's
run
correct.
up above $1,000. Couldn't sustain it,
Right.
and kind of leaving the high for the year from back in January at 1041. Uh, Pretty well protected at this point. What do you think's going
Yeah.
on in the PGMs?
Right. And Palladium too. Palladium looked a little tired and was feeling some pressure. I'm going to give a shout out to our scrappers that follow us and give us a call this week. There's some entry points. We want you to start hedging some product that you have sitting in the yard. Let's start putting some money in your bank account. So
Yeah.
that's just for our scrappers.
To that point, Palladium was down 2.6%, still locked in that pretty broad range,
Yeah.
and kind of tracking generally sideways. Well, with some volatility in there as
Well,
well.
and that's what we're looking for. We're looking to sell some spikes for our guys here, and anything that brings it along, we'll take whatever wind we can get and try to enter into some areas that'll be advantageous for our producers.
And speaking of our scrapping friends, copper was up 2.4% last week. So pretty, again, kind of moving opposite to the precious metals. Copper had a pretty
It got
decent week.
slapped. It got slapped hard and then came back, which was rather impressive. When you
Yeah.
think about it, when you take it down 1100 and then you rally back 800, it's just radical trade, and it's scary stuff for our guys that are hauling every day and producing and consuming. I mean, right now, Chinese economy really doesn't look good. All the numbers I'm seeing out of there just last week and just in the last few days have been very negative. So the question becomes, how much consumption are they going to have? How many cars are they going to produce? That's the bottom line. There's 61% of the market, and it appears that they're kind of at a midpoint, Pete, which means that this 280 to 290 level might be a home for copper for a little bit.
Yeah, could be. Yeah, definitely did not seem too terribly inclined to take a serious run at $3. So
Yeah, I mean, the last time it tried, we hit it hard. I mean, our guys were all over it up at that $3 level, and it paid very, very good dividends for them. So
yeah,
I'm not changing my mind. This thing wants to run 20 cents on any kind of positive news. I think we want to be out there hitting it hard and for our hedgers and really looking at it with a great deal of depth as to if we should be looking to hedge more product than we have.
yeah. So just a couple other things about last week. Retail sales came in a little bit weaker than expected. 1.2%. Expectations were plus 1.8, and that's coming off that really big rebound that we saw in May, June. So June was 8.4%. So retail sales have definitely moderated and were weaker than expected. So that's a little bit troubling.
Right.
But ex auto, they beat expectations. So ex auto, they were up 1.9% on expectations of plus 1.3%. So again, and we talked about auto sales last week. They
Right.
weren't bad, but they're still well off, the kind of what
Well,
we would
yeah,
consider normal
and
levels.
I mean, like everyone knows that we're watching the pickup trucks more than anything. That's going to be our indicator. The guys loading equipment in the back, and and light truck sales and intermediate truck sales are really our indicator. And they haven't really been, surprisingly, they haven't really been as weak as I thought they would be. And if they and the used car market is insane. It's absolutely on fire. But the problem for us is that we need to sell platinum, palladium, and copper for them, and also silver paste and silver solder boards and things of that nature. So we need manufacturing of trucks, and it isn't where it needs to be right now to give us a shot in the arm.
Yeah. Well, let's look ahead to this week. Not a
Please
terribly
do.
packed calendar. We got housing
No,
starts on Tuesday this week,
that's going to be a
1.23.
big number. I mean, if we get a good housing start number, which would really surprise me, we figure 40 to 400 pounds of copper in every new home. In apartment construction, anywhere from 40 to 100 pounds of copper in a new apartment or new condo. So that will give the copper market a real boost.
Yeah, so this is sort of unfolding much like we anticipated several weeks ago, where we were seeing
Right.
really solid June data, but our expectation, because of the resurgence of COVID, is that the July data was going to be off the mark, and so that was reflected in the data we saw last week, certainly, with the possible exception of the inflation data.
Which
Um,
you discussed as we referred to the second wave.
yeah, and so
Yeah.
housing starts, the expectation is 1.23 million. Um,
Yeah.
we have the FOMC minutes for the July meeting are out on Wednesday. So again,
Okay.
we'll get a little bit of a what the pulse of the FOMC is in terms of how concerned they are about this revival of COVID, and
Right.
whether again, I think we're all pretty on board with
He's
keeping the
towing the
foot.
line now. I think he understands how critical his
Yeah.
position is to everything. So I'm comfortable with that.
Yeah, initial jobless claims on Thursday, as usual, the weekly numbers. They've been below a million, and expectations for this one is 945,000. Still a big number, obviously, but you
Yeah.
know,
Yeah.
but it's not in the seven figures that we're kind of used to seeing since COVID really struck back in
No, I
March.
agree with you, and I'd like to see that even drift lower. So we'll have to see.
Yeah,
As the checks thin going out, we might see more people coming back.
yeah. And then we have LEI on Thursday as well. We have the market PMIs on Friday, and then
Okay.
existing home sales. 5.4 million is the expectation for existing home sales.
We
So
could be there without a problem. Yeah,
yeah,
we could be there.
so that
Well,
about
we're at
wraps up the calendar.
lifetime lows for mortgages, Pete. Do you know that?
Yeah, I know. It's
Right.
a lot of refinance activity
A
going
lot of
on for
refis,
sure.
absolutely. A lot of money pumping into the banks, a lot of activity. So I think that number will be stronger than a lot of people think. They're talking it down, but I think at 2.3, if you're not locking in a 30-year on something that you got, and you need a home, now's the time.
Right.
If I was in that market, I would be recommending it.
Yeah, I think the only thing perhaps tempering that is the uncertainty surrounding the economy as a result of the ongoing COVID and partial lockdowns and social distancing and all
Right.
that fun stuff.
Well, you gotta forge ahead. You gotta take risks. Good captains aren't made on calm waters. So get in there and get busy.
There you go, Skipper. That about says it all.
Okay, buddy.
All right, thank you everybody for listening. Please give us a like and follow us. I'm Peter Grant with
Absolutely.
Zaner Metals. Have a great week.
Pete Thomas here at Chicago in the financial district with Zaner. 40 years, award-winning house. We'd love to help you with some metals. We'd also like to hedge your risk. Please take a look at the Tornado platform. It's here to prevent your company from being washed away by some of these radical moves. Thank you for visiting us.